First, taxes are expensive. According to the Tax Foundation, we work well into the year to pay our federal, state, and local taxes. Second, taxes are not going away. Despite recent tax relief, Americans pay more than one-fourth of their incomes to taxes. And third, taxes are always changing. Keeping current with new tax laws is an ongoing challenge. To understand how income taxes work, you first need to understand the concept of marginal tax brackets. Under our current tax law, there are 6 marginal brackets for individuals and married couples. For instance, consider this example of a married couple. The first portion of the couple's income will be taxed at 10%. The next portion of income will be taxed at 15%. The next portion at the next higher rate, and so on. As you look to manage your tax bill, understanding marginal tax brackets is critical. The alternative minimum tax is another key concept to understand. The AMT was originally designed to make sure wealthy taxpayers pay their fair share of income tax. However, because AMT levels have changed little since the tax was created, more middle-income taxpayers will be hit by the AMT in the future. The final concept to understand is the taxation of Social Security benefits. Depending on your income level, you may owe taxes on 50 to 85% of your benefits. The tax on Social Security benefits is a surprise for many retirees and a fact that many retirement planners fail to take into account. Now that you know a little more about how taxes work, let's turn our attention to 4 key tax reduction strategies. The list includes tax filing tips, tax-favored investing and saving, tax planning opportunities, and strategies for homeowners. Tax filing tips are one way to help you manage your tax bill. First, make sure that you are using the correct filing status. If you are widowed or living apart from your spouse, be sure that you are claiming the status that's correct for your situation. Second, claim all possible exemptions. Remember to include all the eligible people you support, including parents and handicapped relatives. Third, review your withholding status. If you received a large refund last year, you may want to review your withholding status to make sure you're not having too much withheld toward taxes each paycheck. And finally, if you are eligible, don't forget to claim the child tax credit. Tax-favored investing and saving may also help you manage your tax bill. There are 2 broad categories of tax-favored investing and saving that many tax-minded investors use in their portfolio. Tax-exempt alternatives offer income that is not taxed by the federal government. Municipal bonds from your own state are the most popular tax-exempt investment option. Tax-deferred investments defer taxes on income until the vehicle comes to maturity or the income is withdrawn. 401k plans and IRAs are examples of tax-deferred investments. Part of looking for tax reduction strategies is identifying tax planning opportunities. For example, if you are maintaining a fairly high balance on your credit cards, you may want to consider rolling over that debt to a home equity loan. A home equity loan has 2 big advantages. First, the interest rate on a home equity loan is usually lower than the interest on a credit card. And second, you may be able to deduct the interest on the home equity loan. Homeowners have a variety of options available when it comes to tax reduction strategies. Let's start with purchasing a home. In general, the points you pay on the purchase of your home are fully deductible from income taxes in the year you buy the house. And when you sell your home, provided it is your primary residence, married couples may be able to exclude up to $500,000 of the capital gain. Single filers may be able to exclude up to $250,000. As you review potential tax strategies, keep in mind that the highest strata of taxpayers pay the majority of total federal income taxes. By managing your taxes, you may be able to better control your total tax bill. Of course, you should be able to consult your tax advisor before taking action. When it comes to tax planning, you can take one of two approaches. You can sit back, invest without considering taxes, and pay your tax bill each year. Or you can take a more informed approach, learning more about taxes and how to better prepare for tax season. The choice is yours.